Boy, what a bloody Friday we had. The market had been flying high up until Friday, and a non-farm payroll jobs report came out. I'm the Wall Street Yardie. This is the weekly market report. We try to get your mind ready for the trading week, give you the levels you need to be watching out for, some of the other things you need to be paying attention to in the market before you go take a trade for the week. So let's jump right in and talk about what we're going to get into this week. We're going to talk about the market overview and give you kind of what's going on in the macro, right? Why did we drop 3% on Friday? That was a very big move down after we've been riding high the last several weeks, really like the last month and a half. So we're going to get into that, talk about why this jobs report was not good for the market and what to expect going forward, as well as the earnings watch, what companies are going to go through for earnings or pay attention to this week for earnings. We've got 3 of them for you this week, as well as, of course, everybody's watching and paying attention to what's going to go on with SpaceX on Friday. That one IPOs on Friday, starts trading on Friday. A lot of mixed messages going on in the internet right now, figuring out kind of what's going to happen with that one. And then, like always, we're going to get into the SPY levels, what to watch for, where the market will break down. If we start seeing things cut under certain levels, we're going to pay attention to that, and maybe we cut our positions, take some profits. Or if we break out higher, I'm gonna give you the levels for that as well. And then we're gonna touch on Bitcoin a little bit. This jobs report kind of falls into this whole Bitcoin conversation. We were seeing some good signs coming out of Bitcoin, but after this jobs report, it really took a bigger hit than even the market did on Friday. So we'll get into that as well. So first things first, let's have a quick conversation about why good jobs report or good news in the jobs market was bad news for the market, right? And the reason is right now we are in a situation where we have a high inflationary environment. So prices are rising, they're going higher. Last inflation CPI, I believe, was somewhere around 3.6, 3.8%. The Fed wants to see 2%. Okay, so we're a long way away from that in order to get to the 2%. So we have a problem with inflation. And when we have a problem with inflation and we have a higher jobs report, the jobs report was expected to be 80,000 jobs added to the market, but we had 170,000. So more than double the amount of jobs that the market was expecting, which means that more people have jobs, more jobs are there. This is socially a really great thing for the market. It's a problem because of the inflation. When more people have jobs, they have more money to spend. When they have more money to spend, they're willing to pay a little higher for those goods. So those prices that we're paying now, these high prices we're paying now, those get to stay high. Okay, companies might even raise their prices because they're seeing that people are willing to pay the higher price. So if that's the situation we're dealing with, prices are going to stay high. Inflation is not going to come down. It's going to be harder. So the only real tool that the Fed then has to bring rates down or cool inflation rather is to make rates higher or keep them as high as they are today. So if rates are going to stay high or go higher, that's a problem for the stock market because higher rates means that if you're an investor, you now have to consider whether it's worth the extra risk to buy stocks, right? They're less attractive now because I can go over here and just put my money in a safe investment in U.S. Treasury notes, which is a lot of times considered the risk-free rate or the risk-free trade, right? Where because it's backed by the full faith of the U.S. government, and they have really good credit. They've never defaulted on that. So people feel very safe about that. So if I'm getting a lot higher rate over there, why would I take the chance on a stock, right? So that's the mindset that's going on in the market. And that's why you saw, even though we had really good news on the jobs front, the high inflation makes it much harder for investors to say, oh, hey, yeah, let me go take the extra risk and buy stocks right now. So there was a big sell-off. That's what we saw on Friday with the 3%. We'll get into that when we get into the charts. The higher rates is even more problematic for the crypto space because of those. A lot of those guys are leveraged. They borrow funds, they trade on margin, which is basically credit. And when those rates go higher, they have more interest to pay, right? So that's what we're looking at, and that's why the market kind of came down. I won't call it a crash. Dropped 3% on Friday, right? So the next thing we want to get into, let's talk about earnings and what we're watching for there. So we got 3 companies we're going to pay attention to. The first one is SailPoint. They make identity software. They're part of this whole software as a service or SaaS software model. This is how they make money on subscription-based software, right? So what's been happening with that industry or sector, if you will, is it's been coming down because people, in the market are thinking that you could just run Claude code, replace these companies very quickly, very easily with a couple developers. And I'm going to tell you, that story just does not jive, because a software like SailPoint's, where it's identity based, it's very more about trust and process than anything else. And that comes with the knowledge of the industry, knowledge of their customer. And that's not something that AI is going to be able to easily replace. AI is trained on public data, not these corporate proprietary information. And this is where SailPoint and a lot of these other major software companies like ServiceNow and so on and so forth, CRM, step in, and they have that industry knowledge. They have the knowledge of their customers. So I'm watching what happens with SailPoint. Chart is looking actually promising, but the chart means nothing as earnings is coming up, because earnings can go either way. So if their earnings continue to be strong, then that would be a good sign for the software place. So then you can maybe look at maybe buying some CRM, some ServiceNow, maybe some Microsoft, if the overall market starts to turn around as well. So we're going to pay attention to what happens there, just as a indicator of what might be going on in the software space in the market right now. And then the next one is Oracle, big data center play, right? So we got to see what they're saying. Oracle has a lot of debt on the books for their data center build out. So we're going to pay attention to if they're saying that's going well. Are they on schedule? Is the debt going to be a problem? Are they going to need to borrow more money? Or are things going as planned, right? So they took a big hit last quarter because they had to reassert some things around their debt. So now we're going to pay attention to see what they say about that. So we're going to pay attention to that on Wednesday after the close. That leads us into Thursday, where we then have Adobe, also another software play. So we're going to see if Adobe can recover. Adobe is not a company I necessarily love, but I'm going to watch it just for that software industry or software sector play and see what happens. So if you're liking what you're seeing here on the channel every week, give me a like, give me a subscribe, link up with me in the comments, give me a shout out, and we're going to go ahead now and jump right into the charts. All right, looking at the SPY chart, which is kind of where we always like to start for the week. Just figure out what the overall market is doing, right? SPY, the S&P 500 ETF, top 500 companies in the US. So if this is moving well, usually the rest of the market will move along with it. Right now, it's not. On Friday, we had officially a 2.58% move to the downside. This was really peaking on closer to 3% during the day. You see, we had a little wick here at the bottom. We were really down here at this low, the low being 735.53. This low was at the time kind of late in the day. On top of that, when I was watching it, it was right about 3:15. We got down here, and then we closed the day just barely off of that. The one thing to pay attention to when you get big candles like this, you want to see what the volume is doing. And in this case, the volume was huge to the downside, okay? We know the reason for this was the jobs report, as we just talked about. Jobs report came in, too many jobs in the market, too much new money going to be circulating, could increase inflation, could force the Fed to then have to raise rates. All right, so the Fed might just pause, wait a couple cycles, couple months, and see kind of what happens to prices before they act or maybe raise rates. But we have a new Fed chair. He's clearly being challenged right up front. So we got to pay attention to that as well. But this candle was huge to the downside. It took out the last 10 days of trading, last 2 weeks of trading gone in one afternoon. So we're going to be very diligent and pay attention here. We had some levels to the upside. I told you we were watching. We never made it up there. We did make a new high, and then we pivoted. So when I'm watching a chart, last week we talked about, we really couldn't figure out, we couldn't really draw any lines rather up there. We had to use our Fibonacci tool, but even our Fibonacci tool, because we never got a pivot, we never knew where price actually stopped. We couldn't really draw our Fibonacci as things were continuing to go up, right? This little pullback here just wasn't big enough. It was only for a couple days, and it just didn't have the size to say this was an official pivot point for me. So we were using our high here back in January, to draw Fibonacci lines. And that's where we came up with these dashed lines and these dashed levels here, right? So if you want to see how we did that, go back and watch last week's market report, episode 11, where we talked about that. And then there's also the easy Fibonacci video that I did as well that'll teach you how to even draw the Fibonacci lines to begin with. So these levels came in. We broke through this first one here at 740. So this was our first sign. As we saw here, we actually closed below. So this is telling me that what we're going to see is probably Monday, maybe even Tuesday, depending on how bad Monday is that we're going to come down, right? The volume is just too high here. This candle is too big. There's a lot of pressure. I'm going to show you the VIX as well. Why I don't think necessarily that this is a start of any bigger correction or bear move. It's just the market got spooked by that report, and we're gonna take some hits. People are taking profits. You got to remember, we're coming from way down here in the March lows. This was let's see what that was. That was down here from here to the top now, right? We're talking about a big 20% move in a matter of 44 days. So that's huge. Anytime you have a big up move like that in such a short period of time, you're going to get corrections, you're going to get pullbacks, and that's what we're seeing now, right? So we just got to find a level where it's going to bounce off of. A lot of times I will use this 50-day moving average, which is my orange line here. That's a level I'm going to definitely watch to the downside, especially right where it is right now. But the more immediate level is 725. So if we can get to 725, as you can see, 725, there was a gap here. Okay, so this gaps, I talk about it. I've talked about this since I've been doing the channel. Gaps fill, right? They are support. They are resistance. Those are places where price will be attracted to and then reverse. So we're going to get price probably come down to the gap here. If it bounces and starts going back up, then we could see a brand new leg up to the 766 highs is what I think would happen. But Monday and Tuesday, I certainly expect those two to be down days, especially Monday. And we never know what the news in the market these days. Things are happening very fast. But I think Monday and Tuesday, we're going to get down to 725. Maybe we get there on Monday and just bounce on Tuesday. But it might take us a couple days, just depending on how bad things start out for the day on Monday here. So that's our level for SPY. 725 is our target for the week. That's where we're looking to see what happens if it bounces. If we close below there, then I'm looking at my 50-day moving average, which is 713 right now. This one might slide up a little bit, maybe into the 720 range by Tuesday. So we're going to pay attention to what happens there as well. If we bounce off the 50, then I, again, expect us to then go on and try to make new highs at 766. So that's what we're looking at for SPY. Let's jump over to the VIX, because the VIX is the inverse of the SPY. It measures the volatility in the market, which tells us, how scared, right? It's kind of the fear index, if you will. It tells you how scared the market is. If you notice here on my VIX chart, let me turn off the moving averages here. They're not really that helpful. Is we like to see in a bull market or an up market, we like to see VIX below 20, right? I've got my marker here at 19, which is kind of the historical mean or average. And VIX is what they call a mean reverting instrument. It always comes back to the average, right? And as you can see here, it oscillates a lot while it's under, but then it takes these big spikes up and comes back down. And we're getting a big spike here from Friday's job report. So we spiked all the way from 16 up to 21. When we start getting above 23, that's when you want to get nervous about maybe we're going to have the bigger down move, but we're not there yet. I don't think we're going to get above there. There is this gap, right? This is what I'm watching for Monday and Tuesday is, will the VIX close this gap out on Monday and Tuesday? And if it does and starts coming back, then that's going to be a really great time to jump in and buy some calls, or even just buy some SPY, some VOO, which is also the S&P 500 from Vanguard. And you're gonna pay attention to that. If we can come here, fill this gap, and start pulling back on the VIX, then that's going to be a time for us to think things are going to reverse and start going higher as well. Now, if we get up here and the VIX continues on and goes up, we're going to get a big move down in the market. But that's what we're watching. I don't think, with this big spike, if you notice, the big spikes always are followed by big red candles here on the VIX. So the VIX reverses. It always comes back to the mean. It's just a matter of time. We're going to pay attention to that one this week. I think we have a couple days, maybe 3 days, we get up to 23. I really want the gap to fill so that we could kind of close that out. All gaps on the VIX have always filled over time. So there's, 100% chance we're going to get here at some point, whether this is the time we do it or not. I'd rather it be now so we can get it over it and the markets start going back up again. Then jumping over to Bitcoin, as I was mentioning in the beginning, that with the jobs report and the possibility of rates going higher, that Bitcoin is taking a big hit. I like leaving my lines on the chart just as a little note, right? That we had this big long downtrend we were watching from way back earlier in the year, where Bitcoin came down here and was going sideways. We've been watching Bitcoin go sideways for a while. It finally broke that trend, started moving up higher, got up to this resistance level around 82,000, let's call it, and then reversed right off of it. I thought we were going to get some luck this week where we maybe bounce higher. We did not. That's why you look at both sides, right? We want to know what the upper level is and the lower level is. But Bitcoin just continued to break on down starting on Monday, right? When we had that big down day, or first down day, and started creating our pivot towards the downside. And then it just kept going lower and lower and lower, right? Today we're looking at Bitcoin here on Sunday, maybe bouncing a little bit to the upside. So we'll see what happens. Remember, Bitcoin is a lot of the Bitcoin trading is based on leverage. It's based on credit. So those guys are going to be very scared about rates going up. And if rates go any higher than they need to be right now, Bitcoin is going to probably break back through this trend line. Our trend line is what I'm watching for support at this point. There's really some other levels below here, but they're quite far away. They're even below the trend line. So we're watching this trend line. If you match this trend line on your chart, I'm starting mine from back in October 6th all the way down and matching it to January 14th for the 2 points. And then you'll get the same trend line that I have here. If we get price of Bitcoin here and start bouncing up higher, and maybe we start staying in this range until we get some settlement around what rates are going to be and which direction we think rates are going to go. If we start seeing Bitcoin close above, this 66 and maybe even the 74 again, especially if it closes back up above 74, then you can certainly expect it to break 82 and then work its way on up to maybe 97 to 100,000 at that point. But until then, we're going to have to take a pause on Bitcoin and just kind of wait it out and see what happens here over the next week. Can we find support at this trend line, or is it going to be a bigger problem for us as well? All right, I'm the Wall Street Yardie. If you liked what you heard today, link me in the chat, leave me a comment. I'll see you next week.